Please welcome the panel on From Capital to Catalyst, how African sovereign wealth funds are accelerating investment opportunities, moderated by British Robinson, Chair Africa, Milken Institute International.
Well, good morning, everyone. It's a pleasure to be with you all and to welcome you to the role of sovereign wealth funds in financing Africa's future. I am honored to be here with dear friends, colleagues, and former partners. Badar from Ithmar Capital, Alon from Africa 50, James from Equity Group, Minu from Nigerian Sovereign Wealth Authority, and last but not least, the President and CEO, Somalia from the Africa Finance Corporation. Let me first say that we are here in the UAE, so I want to honor and say happy birthday, happy 54th birthday to the UAE government. I also want to thank the UAE for their massive announcement about a week ago. Somalia and I were together in Johannesburg at the B20, G20, and at the end of that session, we were thrilled to see the $1 billion commitment from the UAE government towards AI in Africa. So very exciting. It's very clear. The Milken Institute now for 7 years has held this conference together, combining it with Africa, and this year we've doubled down on the Africa portfolio and agenda. But it's very clear the deep connection between the GCC countries and the continent, particularly in the last few years. And today we'll really sort of get after it and talk about opportunities related to co-investment. So again, welcome to this session. I think we all know that Africa faces interesting financing gaps, particularly when we talk about infrastructure and other fast-growing sectors. But the sovereign wealth funds in Africa are a quiet story, a story that most people, I don't believe, know about. These sovereign wealth funds are growing, they're innovative, and they're creative. They represent long-term patient capital, and they're increasingly playing an absolutely critical role in creating strategic vehicles to mobilize domestic resources, but also to attract international capital and co-investment. Sovereign wealth funds in Africa have evolved from playing a more passive role to playing that more catalytic role. And we firmly believe they are a huge part of the future of Africa's growth, but also playing a critical role in what we all know as the capital stack. So with that, I'm going to kick us off to get started, to perhaps set the table a bit with Somalia. Somalia, as I said, we just returned from South Africa and the B20 and the G20, where we were co-chairs of the Finance and Infrastructure Task Force. So if you could help us sort of set the stage, widen the aperture a bit for our discussion, first and foremost around the changing landscape around opportunities for investing in the continent, particularly around domestic capital mobilization, and where and how the AFC, the Africa Finance Corporation, is partnering with African and Gulf sovereign wealth funds. Somalia, thank you.
Thank you. Good morning. Thanks for the opportunity to be here. You're right. We just came back from the G20, V20 summit, and it was very clear that we're now kind of looking at two worlds. One in which we have geoeconomic contests, we have fragmentation, uncertainty, and then the other one in which there's energy, there's mobility, there's youth, there's creativity, there's minerals, there's food, and that's Africa. So clearly Africa is a new compelling investment proposition. And it's compelling because it's going to house the future workforce of the world. And it's young and growing. Urbanization is vast. There's a massive urbanization opportunity there, similar only to one of China when it was emerging. We have significant, resources on the continent that are required for both the energy and digital future the world aspires for. And I must say, even the net zero aspirations of the world is all, dependent on how we can all work together to transform Africa's vast potential. Interestingly, we also have lots of renewable energy sources that can produce less carbon-intensive future that the world needs. And I'll just take a moment to emphasize some of these critical inputs. I mean, just yesterday I was reading an FT article about the importance of copper. Several people are saying copper is the new gold, and that there is no electrification without copper, no EVs without copper, no defense, no rearmament without copper. And they're looking at copper supplies that are not easy to access or that are declining, while Africa has significant copper reserves. And I know that because, as we speak, one of the world's largest copper smelter is being commissioned in DRC. And that is processing copper of significant high grade using renewable energy, so demonstrating industrial decarbonization happening in Africa. Of course, that's not the only resource on the continent. There are several other resources. I mean, it's assumed that Africa has 30% of the world's minerals, but it's beyond 30%. I say that because the exploration that has happened on the continent is minimal. Very, very little exploration has happened. You'd be surprised that in a country with over 1 million square kilometers of landmass, exploration has been less than $10 million. So clearly, the potential is untold. Likewise, we have this Africa Continental Free Trade Area, which is going to be one of the largest markets in the world. Of course, it needs infrastructure and connectivity to make it happen. That's another massive opportunity on the continent. And I mentioned the fact that we also have domestic capital on the continent, which British referred to. So our research shows that we have over $4 trillion of domestic capital pools and $1.8 trillion in institutional savings, over $500 billion in pensions. And when we did the first research, it was 450, but with the outcome of that research, a lot of the pension funds have come to us to update the data. So we clearly see now that we have over $550 billion of pension savings. We have over $300 billion of pension savings and over $150 billion from the sovereign wealth funds. So all of these are currently invested in short-term government paper, and we need to find a way for risk innovation and structure intermediation for this to flow into productive areas of the economy like agriculture, like infrastructure and industry. Also, we are very keen to build on the partnerships that we have. So, for example, in Nigeria, we've created a company called InfraCredit with the Sovereign Investment Authority. There, we are providing investment guarantees to pension funds to invest in infrastructure and industry. That is important because pension funds, they have fiduciary responsibility for safety first, then liquidity and profitability. So we need to find a way to make them feel safe to invest. And we're extending this to East Africa. And again, we're partnering with another sovereign wealth fund in Angola called FISDEA. There we work with them to their investors in AFC, and we're working with them to build gold mines and critical minerals and rare earths, across the continent. We have a big fertilizer company that we're building. We're supporting Dangote Fertilizer. They are currently 3 million tons. They are growing into Ethiopia. There, the Ethiopian Sovereign Wealth Fund is partnering with them. And so there are partnership opportunities with sovereign wealth funds across the continent, especially because they are becoming more catalytic investors. They're becoming more focused on how to, I would say, develop the economies beyond just savings. So there's a huge opportunity for partnership there. We have partnerships in the Gulf, not with the sovereign wealth funds, but with industrial groups. So for example, we are partners with Mazda, where we have the largest renewable energy asset on the continent. We have over 1.4 gigawatts of renewable energy, solar, wind, and we have a pipeline of about 3 gigawatts, pipeline with PPAs, and a bigger pipeline of over 10 gigawatts. So massive opportunity for sustained partnership there. We are also in partnership with Vision Invest in Saudi Arabia. They invested in our company, Arise Integrated Industrial Platforms. That's our industrial ecosystems platform across the continent. Of course, there's room for more partnership. And I say more partnership because the Gulf economies are growing and they all seek to be more complex. So clearly they need to have more credible supply chains. And they should be thinking of these supply chains, in a way that extends into Africa or starts from Africa and ends here. A good example is here in Abu Dhabi. You have the aluminium smelter, which is based on bauxite ores from Guinea. So this can be replicated, especially if they are going to achieve the digital feature that they want. They've promised or they've advised that they're going to build massive data center hubs. They all have plans to grow big cities, all of which require steel, aluminum, and all of this is in Africa. So it makes sense for you to think of not just importing steel, but investing in an iron ore mine that transforms into steel, and then you can do further processing here. Likewise, with the opportunities for copper. There are several high-grade copper opportunities. In fact, I met somebody here from the Middle East a few months back, and they said they were looking at copper mines in Zambia. And I offered a partnership to work with them to do copper smelters because we are changing the narrative. We don't want to be exporting raw material. We want to export semi-finished and finished goods, especially because we need them on the continent. So we are open for partnership. We have always focused on how we can transform Africa's vast potential to prosperity for our people and for the globe. There are many things we can do together. We are intentional about our project development to build I would say, pipeline of bankable projects. We're focused on access to capital, and then we're also focused on flow of funds. So I just tried to summarize the 3 recommendations from our task force, which is increase the supply of bankable projects, 2, increase access to capital both locally and internationally, and then thirdly, the flow of funds between areas of need and areas of use.
Thank you, Samala, and thank you for getting us started. So I want to turn and drill down and pull a couple of the threads, but to Badar, as the CIO of Ithmar Capital, maybe you can tell us a little bit about, again, double-clicking on the role of the sovereign wealth funds. You've been so creative and so innovative. You have some deep partnerships, some new partnerships, in fact, with some of the GCC countries, but also talk to us a little bit about the core sectors where you're sort of playing and opening up the opportunity for others to invest alongside you. Thanks.
Yeah, thank you, British, and of course, I would like to start by thanking the UAE for hosting us, also Milken for this well-created summit and program. And also I would like to thank you, British, for your energy and what you are doing for Africa and trying to show the world what us Africans are trying to do amongst us and also for our respective countries. So maybe a few words about Ithmar Capital, which is the sovereign fund of Morocco. And I skipped the wealth in the sovereign wealth fund word because, as you all aware, as opposed to funds from the GCC or from the Southeast Asia, we don't have resources from oil and gas or for trade surpluses, as you can find in Southeast Asia. So we work on limited resources provided by the government, and we have this mandate to get this multiplier effect for every dollar we invest. We need to mobilize $2, $3, $4 from the private sector or international investors. So this is really a core in our mandate because if we want to attract these investors, we need also to consider or find and develop projects that are commercially viable. We cannot do projects that are not profitable. Otherwise, we will not be able to attract these investors. And also the other thing that is specific to us and very the vast majority of sovereign funds across Africa is that we are more like a strategic development funds rather than typical sovereign wealth funds that invest in existing companies or existing assets, up and running, yield generating. We usually set up or develop projects from scratch, so greenfield projects, which is quite complicated, and my friends here can also speak about it, because the thing is that the capital is available across the world in this specific region. What they are looking for is investment-ready projects. They don't like or they cannot do project development and take this development risk. Here, the work of ITMAR Capital, NSIA, even Africa 50, and also AFC, where we try to find ideas and transform these ideas into bankable projects and investment-ready projects. It takes time. It's challenging. It needs also money, so you need to mobilize money for this development phase. But it's the only way in order to attract this kind of patient long-term capital. So for ITMAR Capital, we started as the development fund for tourism and hospitality sector in Morocco, because actually tourism and hospitality is a critical sector for the Moroccan economy. It provides a lot of jobs. It generates a lot of foreign currency. We are net importers. We are always looking to develop foreign currencies and attract foreign currencies. And at some point, given the successes we had in this sector, our stakeholder, which is the Ministry of Economy and Finance, decided to broaden our mandate to other sectors. But maybe just come back to the tourism and hospitality sector, where we developed a unique JV actually with funds from this specific region. It's called Wissal Capital, and it was possible because of the strong will and leadership of His Majesty King Mohammed VI of Morocco and the rulers of the countries within this JV. So basically, it's a JV grouping PIF from Saudi Arabia, KIA from Qatar, Mubadala from Emirates, and KIA from Kuwait. And basically, it's $2.5 billion JV. In order to deploy capital across the hospitality and tourism sector in Morocco. And we are trying to replicate this kind of JVs for other sectors, but also across the continent. We will come to that later, maybe. So when we decided to broaden our mandate, we tried to look at what are the sectors or key sectors for the Moroccan economy, and basically what are the main pain points. So basically it's job creation and FX generation again. I'm not talking about social sectors or aspects, only economic aspects. So when we reviewed the economy based on this criteria, we decided to focus our efforts on manufacturing, agriculture and agribusiness, because they create, of course, in addition to our legacy sector, which is hospitality and tourism. Again, they create jobs and they generate foreign currencies through exports. The last one actually doesn't create a lot of jobs or generate foreign currencies, but it's an enabling sector. It's infrastructure, because you can produce really competitive cars or goods, but if you don't have the roads, the ports, or the airports, you will not be able to attract these tourists or export your goods. So we are focusing on these sectors and trying to act as a honest broker with this what we call a double bottom line approach. Of course, we seek developmental impact, but we need commercial viability. We are a for-profit organization, even if we are state-backed. We only do commercially viable projects and initiatives. And we try to get this, we have this concept within ITMAR called ideation. So we review several ideas and try to get these ideas again to the feasibility stage and development stage, and of course, hopefully to a investment ready stage. And currently, actually, it echoes what Samaila was saying. Our flagship project, we are spending a lot of time and efforts on it. It's a integrated industrial project on the aluminum space. So the idea was like, what are the resources of the country? And also we try to cross this with the needs of both the country and its trade partners, namely the European Union. And when we look at the natural resources of the country, of course, we have phosphates, but we also have a lot of wind and a lot of solar. Really good quality of wind, and so we can produce affordable, reliable green electricity. And as you know, aluminum smelting is a really electro-intensive industry. So we are working with our partners in order to develop a aluminum smelter in Morocco, when we will be, of course, importing bauxite from Guinea, transform it in Morocco into aluminum, and in form of alumina, transform it in Morocco into aluminium, and then export this aluminium. But I mean, for the domestic market, but also for international markets, both in Africa and the rest of the continent, and also European Union. So we totally agree and align with what Samaila was saying. We need to work together as Africans in order to keep more value add in the country, in the continent, in order to attract these investors. And these investors are looking at Africa and trying to find these investment-ready projects. The key is that we need to offer these international investors well-developed, well-structured, de-risked projects, and this is where institutions like AFC or Africa 50, and also what we are trying to do as ITMA Capital or NSIA, is to de-risk project, create the investment opportunities for these international investors. Maybe I'll pause here, and of course,
Great, thank you. So Aminu, as the other sovereign fund sitting on the panel, you've been quite innovative. You've really looked, like Badar, you've looked at the key fastest growing sectors, which are going to build those jobs and really accelerate economic growth. Maybe you can tell us a little bit about your examples, a few examples, but also how you're really crowding in private capital, but also domestic capital alongside some of those strategic investments that you're making. And I know you have similar facilities and platforms that Badar was speaking of, but also you all are partners. So you co-chair. Tell us a little bit about the co-chair role, because this gets back to enabling the environment and the ecosystem as a collective sovereign wealth fund. So maybe speak to that as well, NSIA. Thanks.
Thank you. Thank you very much, British. Delight to be here. I think if we take a step back as sovereign wealth funds in frontier economies, I think there are 2 to 3 things that we have to be particularly focused on. I think the first is managing the imperative to save on the one hand in the context where there's so much need to spend, particularly in the context of infrastructure. The second is around, by law, a number of us sovereign wealth funds are constrained to deploying capital within our sovereigns because of that need to spend. So within that context, how do we offer de-risked propositions to external capital with that exposure continentally? I think that's also a very important point. And then thirdly, how can we be catalytic with our capital to conceptualize, develop, and de-risk projects such that we can also essentially attract external capital to our respective projects. So these are, I think, the 3 considerations that typically affect how we deploy our capital. And within that context, I think NSIA has focused around 2 big buckets. The first is around creating institutions, i.e. being catalytic, and then the second is deploying capital as a financial investor on a direct basis. And when it comes to creating institutions, we have done so, I think, over the last 3 years. The first thing that we're very excited about is an integrated platform that we're working very closely with the World Bank and the IFC around, which is how do we create an integrated proposition that is able to deploy capital into the infrastructure sector in a manner that actually fundamentally moves the needle. When you look at a lot of the projects, particularly in the context of Nigeria, yes, they are profitable, yes, they are bankable, but they are not of scale So how do we create an integrated platform that has a project preparatory component, a viability gap component, a guarantee component, and a financing component that actually allows us execute upon large-scale bankable projects in a manner that actually moves the needle from an infrastructure standpoint. The second is excellent work that we're doing with Samaila at the AFC around storage. We all know the consequence of post-harvest losses in the context of Nigeria and the impact that it has on food prices, the impact that it has on our ability to forward integrate in the context of processing for these harvests. And so what we're doing is creating a storage platform that looks at warehouses, that looks at commercial storage infrastructure, that looks at cold storage, such that we can begin to crash those numbers at scale. And then thirdly, over the last year, we have worked closely with JICA, the Japanese, to find a way to engage our youth in the context of technology. How do we leverage what essentially was a grant from JICA in order to create an impact innovation platform using matching capital from the NSIA in order to deploy in Nigeria's fast-growing venture capital space. So that's on the creation of platform side. On the direct investment side, I think we have a significant amount of transactions that we are bringing to close. I think the first is with OCP, trying to create a DAP and an ammonia plant, leveraging Nigeria's vast natural gas resources, and essentially creating or producing ammonia such that we can export to Morocco. The first instance of successful South-South cooperation. We also have significant investments in hyperscale data centers in Lagos, which we're very, very excited about. And then finally, on the oncology side, trying to focus around reversing medical tourism. It's a project that we just closed out with the IFC. How do we proliferate high quality and world-class oncology care for the benefit of all Nigerians at a reasonable price? We're excited. We've executed upon our proof of concept projects, 1 oncology center and 2 diagnostic centers, and we are expanding using the co-funding methodology between ourselves and IFC to expand to 4 oncology centers and 16 diagnostic centers. Thanks.
Thanks, Aminu. One thing that Samaila raised and Badar is you are also trying, at the end of the day, you're trying to get other investors to crowd in alongside you. You are providing that safety, that reliability, that sort of sense of de-risking the deal, as you've mentioned, but it's more than that. In Africa, we're not just managing risk, but we're managing fear. And I think the sovereign wealth funds are a credible platform for managing that fear. Aminu, I'm going to ask you to pull the thread a little bit, because fear comes in the shape of, we have the data. For example, we know infrastructure, year over year, for the last decade, the returns are 8 to 9% in Africa, in infrastructure. The default rates are less than 1%, but yet we're still managing, not risk, because we have the good data, but we're still managing the fear. And I think in a way, I believe in a way, the sovereign wealth funds, the pension funds, the local African capital, that $4 trillion that's sitting there, that you are all, I'm going to get to the commercial banks in a minute and Alon, but that you are trying to unlock the other capital that's sitting on the sidelines. So just take a minute to speak a little bit to this point, because you have really been a leader along with Morocco in this particular question. Also, you have some facilities and platforms to deal with the local currency issues and to deal with the exit issues that we know outside investors are constantly asking of you.
It's a very, very, very important point, actually. And I think in addition to our capital being catalytic, I think what external capital would always want to see is your ability to bring in local currency conservative capital from your own climes who are just as focused around safety. I think a combination of those two things is what gives comfort to external capital. And if you take a step back and you look at Nigeria, for example, alongside AFC, we created this company called InfoCredit, which is essentially a well-capitalized, well-governed, and well-managed financial guarantor that provides a wrap on bonds issued by infrastructure projects such that pension funds can participate. And what we see is a combination of two things. The first is around returns, both on a local currency and a hard currency basis, easily in the 20s, mid-20s. And from a default perspective, almost zero. And yes, you can say it's the quality of selection, because as much as possible, we try to be a capacity provider as opposed to a risk taker. So it's the quality of selection, it's the quality of preparation of the project, it's the quality of the monitoring and evaluation. But you see a big disparity between that perceived risk and the reality. But understandably, I think what external capital at scale will want to see is two things. Number one, the ability of your capital to be catalytic in terms of the preparation and execution of the projects. And secondly, the ability for them to see that conservative capital within your jurisdiction who have a good appreciation of risks locally are also attracted to these projects. And I think a combination of those two things has led to that external capital flowing in.
Thank you, Amino. So we're going to shift gears a little bit to commercial banks and the role particularly commercial banks play in general, but in particular African commercial banks. And James, you've been a real leader on the continent with the Equity Bank Group. Huge hat tip to you around innovation, around taking a truly Pan-African approach to investments. But I want you to take a few minutes to speak to the role that African commercial banks can play alongside pension funds and sovereign wealth funds, and how you are viewing partnering with them through strategic investments, and particularly around infrastructure, because you're really leading the way in that space. Thank you.
Thank you very much. Equity is one of the systemic financial institutions in East and Central Africa. And broadly, Equity, we are lucky that our strategic shareholders have a long-term view and are development-oriented. NOFAD is our largest shareholder. Second largest shareholder is IFC. And so essentially when we thought of partnering with development banks and particularly the institutions led by my panelists here who are defining and shaping development financing in Africa, it became easy. When we chose to champion private sector-led development, we were fully supported by the shareholders on the board. And essentially, it's out of recognition that Africa will not transform with commercial banking funding. It's short-term, and of course, when it's short-term, it doesn't really play well in terms of long-term financing. So the objective was then to partner with others who are like-minded, who then we could be able to create a full continuum of financing. And development banks came first. And the mechanism we use there is where we take long-term funds onto our balance sheet, and so we can do it ourselves. And at the same time, where we are not able to take it on balance sheet, we syndicate with them. And that is how we honed our knowledge and skill in understanding development financing. Of course, the development banks were better positioned than us in structuring. So we learned a lot from the likes of KfW, Propac, or Africa Development Bank initially to be able to understand project financing, because we are not coming from project financing. The biggest role we feel commercial banks can bring on the table, particularly when we collaborating and partnering with pension fund, development banks, is local knowledge. We have in each of the countries that we operate in 7 countries, we are licensed. We understand regulation in that country. We are partners, like when it comes to DRC, which is a very big opportunity. The government is our core shareholder, holds 12.5%. So we are able to go to government and say, this project is good for the country. So we can do the local legwork with the regulators. The second aspect we bring is the massive infrastructure in the field or on the ground. And that then can easily mop up opportunities across countries because of that infrastructure network. Recently, we have seen a spike in terms of a saving culture in the continent. So commercial banks can also significantly mobilize domestic savings and domestic funds. And that really then puts skin in the game for the citizens and the countries that the projects are held in, and they feel part and parcel. So we become the face of local participation. The aspect of being able to front, if it is instruments like commercial paper, guarantees, we're very well positioned because of understanding the terrain, the regulation. So we can bring that. We can also bring and become the platform for blended financing because of the trust we enjoy in the country, the knowledge in the country. So we can play in philanthropies, development partners, development banks, and other institutions, and we have a play of blended finance, and we can be a good broker, great coordinator because of our local knowledge and knowledge of nuances in the unique market, and the ability to engage regulators and governments on behalf of the consortium or the syndication partners. So that really gives us a huge opportunity. And lastly is to be the go-to partner in case you want to do domestic capital raising. Like if you want to issue a commercial paper, we then are able to do a lot of groundwork and also to build the trust and confidence in local communities to participate. And we have seen that when it comes then also to trading those instruments with global markets, if they're issued in domestic market, we become good holders of those instruments and able to service the partners that are coming on board. So that is where I'm seeing commercial banks playing a role. And the last one is the issue of capacitating and educating population and government. Essentially, one of the biggest challenges in domestic market is the depth of knowledge and skills, including with the regulators and government. And because of the trust that we enjoy being systemic institutions in the country, then we can partner with my colleagues here, and we become the face by rendering our trust in calling the governments and institutions across. Thank you very much.
Thank you, James. So I'm going to turn to Alon. I'll turn to you. As the CEO of Africa 50, you have played a very unique role in this conversation and overall in the capital stack. You know, so many deals don't reach it to close because of the lack of project preparation and the lack of getting in front of the deals before they get to close. You and your team have done exceptional work in the last few years in such a quick period of time of preparing these large-scale projects so that they actually close and that we actually see some results, particularly in the energy, transport, digital infrastructure space. So maybe you can speak a little bit to that and that very unique work. Again, going back to helping the typical or investors that are sitting on the sidelines sort of join you. You're sort of leveling the playing field and trying to to create that on-ramp. Where do you see the strongest opportunities for collaboration with sovereign wealth funds, but also how you are leveraging this unique role and expertise in co-developing and co-investing in priority projects, particularly around infrastructure? Thanks.
Well, thank you, British. That was a long question. I tried to answer, but it's appropriate because we see a significant change happening on the continent. And of course, Africa always had opportunities. Everybody was talking about the opportunities in Africa. But what is happening today is that we are starting to realize those opportunities. And I think there are many reasons for that, but one of the key reasons, in my opinion, is that African institutions, African players are taking leadership, working, of course, with our global partners to make things happen on the ground. So African institutions such as sovereign wealth funds, strategic funds, Africa Finance Corporation, Africa 50 Equity Bank, NSIA, etc., ITMA, we are not waiting for anybody to come and do things for us. We are doing it. We are showing what we are doing. And I will argue now we are in a process of scaling up. We have a track record to show. One of the things that was important, and this is certainly where Africa 50 is playing an important role working with our partners, is that we decided to focus a lot on project development and project preparation. We had to build up the pipeline of investment-ready projects for investors that are sitting on the sideline with pools of capitals that are looking at ways to invest these pools of capitals. But somebody has to do the hard work to develop the project to bring them to the phase where they become attractive to large pools of capital. We started at Africa 50 with Africa 50 Project Development, which is a not too big fund. It's a $100 million fund focused exclusively on project development. We have a track record to show. And then we now scaling up with Africa 50 AGIA, the Alliance for Green Infrastructure in Africa, which is $400 million fund focused on project development only. We're doubling down on project development. We need to build a pipeline. We need to make sure that we build a pipeline at scale so that we can attract investors. One of the things that we are also doing is to work with our partners within Africa and globally. We have several collaborations with African sovereign wealth funds. In fact, we were at the beginning of the Africa Sovereign Investment Forum, which is an association of sovereign wealth funds of Africa. We signed an MOU when this association was launched. We're working closely together with my brother Aminu NSIA, where we've launched recently a platform for distributed renewable energy. We work together with other partners. But it's really important that we African institutions, we de-risk those projects. We come in, we put money at risk and resources to de-risk the project. But in addition to de-risking, we need to create scale, opportunities at scale. And this is one of the reasons why at Africa 50, we've launched a couple of important initiatives. The first initiative is asset recycling. We are going ahead and identifying assets which are owned by governments, they're commercial assets, but governments do not necessarily have to own those assets. We're pulling those assets into vehicles at scale. These are cash flow generating assets so that we can bring investors to fund these assets that are concession to Africa 50 and partners. So this is one of the ways where we're creating scale. I also want to say something that is now, we see a lot of momentum, but we started at Africa 50 to work on it, is domestic regional capital mobilization. You see, when we raised the Africa 50 Infrastructure Acceleration Fund, it's a $500 million fund.
The decision that we made is to first to raise money from African investors, such that today, out of 22 investors supporting the Acceleration Fund, 20, I repeat, 20 are from Africa. Only 2 are from non-African countries. I'm glad that NSIA is one of the investors. We have also Fundo Soberano of Angola, one of the investors. We have many African pension funds. We have many strategic funds. It's always about, let's show that we believe in African assets, while at the same time, we're trying to raise money from non-African investors. So this is the story. This is why things are changing, because more and more, the Equity Bank, the Africa Finance Corporation, the NSIA, the ITMA, we are there investing, and we are pushing, and then we're scaling up. This is what we are doing at Africa 50. And just mention one project because the opportunities are so vast, as Samala was saying. Samala is developing the Lobito Corridor. With Africa 50, we are working with DRC government, Angola and Zambia to build a cross-border transmission line that would get power from Angola to serve DRC and Zambia. It's a juicy project. It's a project with impact and return. It's a good project with a good return. It's not easy to put together, but it's a juicy project when you do it. So there are a lot of good opportunities. And by the way, it's $2 billion. So the kind of scale that global investors actually like. So British, there is a lot happening on the continent, but folks in this room, on this stage and others, we will work with our global partners to make sure that we can realize those opportunities, and it's no longer just an opportunity now. We're transforming the opportunity in reality.
Yes. Thank you, Alon. I think that was terrific. So Juicy Project, we love Juicy Projects. Alon, are you inviting folks to invest in the Juicy Project?
Well, it depends on the premium that they will pay. So no, we like to make sure that we offer a broad range of projects to our partners. But negotiations
Sure.
could be tough sometimes. But yes, we love to have partners.
I just want to make sure everybody knows they'll find you. I'm going to go back to the sovereign wealth funds. Badar, I'll start with you and Aminu. You both have been doing some very good partnerships with the Gulf cooperation with the GGC. And then alongside, Alon just mentioned this, alongside ASIF, the African Sovereign Wealth Forum, which brings all of these investors together. Can you share a little bit more, have both of you answer this question about how ASIF and how you're collaborating to unlock additional investment in partnership with some of the GCC countries? I just want to make sure we pull that thread. We are sitting in the UAE, and I want to make sure that's clear. Thanks.
Sure. Thank you, British, for the opportunity. Yeah, so ASIF, the Africa Sovereign Investors Forum, is an initiative, that we launched back in 2022 with 10 members and the support of Africa 50 and AFDB as well, but also funds from the region, so ADQ, ADIA, and KIA, namely, who they believe in this initiative and what Africa can do for Africans, and they want to participate and support. And basically, the idea is twofold. One, sharing experience, knowledge amongst the sovereign investors of Africa, because there is successes, also failures that needs to be shared and lessons to be learned from these successes and failures, and also to join efforts in order to be audible. When I say audible, it's really important because these large investors or global investors, they have so many opportunities across the world. So you need to be audible. You need to be put on their radars or screens in order to them to consider investing in your country or continent. So by joining our efforts and reaching what Samaila and also Alain was saying, the scale, you become audible, and they can consider investing in your continent or platform. The second leg is ultimately mobilize capital for the continent or our respective countries, because it was started with a meeting here in Abu Dhabi with one of the largest sovereign funds in the world, And they were like, look, we like your country, Morocco, but it's too small. There is no scale for us. We cannot move. I would rather deploy $1 billion in Indonesia or Canada rather than deploying $100 million in Morocco or any other country across the continent. So if you are able to pool some kind of platform or club deal or something similar, we can consider it, because we are like 40 people and we have billions of dollars to deploy every year. So you need to address this concern for us in order for us to consider your opportunity or investing alongside you guys. So we started thinking about this with the help of my friend Aminu and SIA team, and also other members of the initiative, in order to structure what could be an investment platform that could mobilize capital from these investors from the GCC, but also we have really good discussion with CIC, China Investment Corporation, they are really interested in this, with USDFC, with Cofides from Spain, but also with philanthropies from the US, who can act like catalytic investor, providing a junior tranche. We recently had a really good and enthusiastic meeting with one large DFI. Unfortunately, we cannot disclose the content, but they are also supportive and they will commit to the platform. As of today, both NSIA and Ithmar Capital issued LOIs, financial LOIs, to invest in the platform. We also have many LOIs from the members in order to contribute in terms of projects, in order to build the pipeline. So it's an initiative that we are working on with the strong enthusiasm. We believe in it. We will make it happen. We have this strong relationship with Africa 50 and AFDB. We see it also as a partnership that will benefit both parties, because they are developing projects. We are also looking for projects and developing projects, and the needs are such that there is not enough capital, not enough initiatives in order to address these needs. So we are really happy with this. It's moving fast. Again, we are working on this together with NSIA. Last June in Abuja, we signed a cooperation agreement with them in order to develop this. And maybe just to finish, a provocative statement or thought regarding the risk and what you mentioned, the fear of risk, because it's really the fear. And what we start seeing across the continent and amongst the global investor is that, the Alain's team and Samaile's team are doing such a good work in such a pace that today the projects are de-risked, and when you de-risk projects, the returns are lower. So these global investors are still looking for this double-digit plus IRRs, while the risk does not justify this kind of IRR. So we have to educate these global investors that, at least in the infrastructure space, as you mentioned, the default rate is really low. It's second to the MENA region. So we need to educate these people and help Africa 50 and Somalia continue de-risking and building this pipeline of projects, because it benefits the continent, it benefits all investors, and it's the only way to attract these global investors. Thank you.
Thank you. I couldn't agree more. Well said. Aminu, you want to pick up on that, and then I'm going to do a lightning round with everybody.
Okay. So just to top up on what he said, I think when we look at pipeline, we're looking at three broad buckets. The first is industrialization anchored around beneficiation. I think that's fundamental for the continent. How do we leverage our primary resources within the continent as opposed to exporting raw materials? There's been a lot of projects that have been prepared in that regard that we're excited about de-risking and financing. The second is around regional projects. For example, the pipeline between Nigeria and Morocco. For example, the petrochemicals projects that I referred to with OCP. So large-scale projects that take quite a bit of time to prepare, but that have fundamental impact beyond one sovereign. And I think the third is around asset recycling. So how do sovereign wealth funds leverage their public sector advantages in order to drive the acquisition of attractive public sector assets and optimize upon them using their patient capital. So around those three buckets are where projects are being prepared for capital that we're raising on the ASIF platform.
Great. I'll actually allow you to continue on. I want we've got about 5 minutes left. I want you all to say what's your, Aminu, I'll start with you and then Samaila, your best bets. Where do you want to see people investing alongside you? What are the best sectors? What's your pitch?
Great question. I would encourage around industrialization through beneficiation. How do we elevate our respective economies from a return standpoint, from a social impact standpoint, by leveraging what we have within the continent?
Thank you. Samaila?
So we're looking at all of Africa, and we're looking at the future of Africa. And when we look at the future of Africa, we're very interested in technology. So we're building what we call Talent City in Lagos, Itana. We're building a digital-free zone there. So that is something that we're very focused on, and we think that there's opportunity there for all the data centers and all the artificial intelligence economy to evolve therefrom. We're also focused on transformation. We're focused on how to build, the iron ore plants, the aluminum plants, because we have so many projects. We're building 830 kilometers of rail. We don't want to import the steel from anywhere, because the iron ore exists in Africa, high-grade iron ore. We want to convert that. We're building several transmission lines. Alan just talked about one. We want those lines, the wires, to be made in Africa. So we are focused on how to build the goods, build the infrastructure that will connect Africa. And we're going to use African capital to start, and we're looking for partners to scale. When we say we have found $4 trillion of domestic capital pools, we will continue to do the research and engage with both government and regulators to ensure that we have proper structured intermediation for funds to flow from African resources to African projects.
Thanks. James?
What is exciting most is seeing private sector in Africa rising to the occasion and wanting to participate in development financing. But on the other hand is the willingness and somehow readiness of governments to recycle their assets, release capital, give that as an opportunity to the private sector, and use the proceeds from the asset recycling and capital release to de-risk and to almost create incentives to add new innovative projects across Africa. The focus on value addition, particularly agro-processing, and value addition on mineral resources to create the base for Africa industrialization on a green basis, with energy also being a major component of those investments, is exciting.
Wonderful. Alon?
Well, two things. I know you asked for one, but two things. One immediate opportunity, it's around asset recycling. We've been talking about it for 4 years. We actually launched the first asset recycling platform called Africa 50 Mobility that has one anchor asset bridge, the Senegambia Bridge, but we have a huge pipeline, and we have today the ability to offer to the market, to investors, a large-scale asset recycling platform where folks can come in. So those that are willing to come in at a low premium should come now, because after it will be a bit more expensive. But longer term, we have a number of projects similar to what Samaila and Aminu, James, and Bard have said, which is we're developing project transmission. But I still believe that infrastructure, whether it's power, transmission, probably not distribution, is quite a big opportunity. And I would argue also you have sectors like airport, port. We see a lot of opportunities there to support the industrialization. That is the ultimate goal, but we need basic infrastructure to enable us to be able to do the industrialization that we want to have.
Yes, absolutely. Bidar?
Yes, thank you. Maybe two separate answers. One is individual, one is professional. From my own perspective, the best investment is always in people, in human. there is no better capital than human capital. So there's this saying that when is the best time to invest in education is 30 years ago. So in Africa, we need to double down on education, and it takes 20 to 30 years in order to see the return. So you can understand why investors are not rushing to invest in education. But from a professional perspective, I cannot agree more. Infrastructure is especially electricity and power. And in my religion, there is a saying that we made life possible with water. You cannot have development without electricity. So it's the first prerequisite in order to develop your country or your continent. It's electricity and, of course, transmission. And then, of course, connectivity with roads, ports, etc. So infrastructure is the first step in order to reach a certain development, in order to unlock the potential of your people and your economies. Thank you.
Wonderful, thank you. Well, please join me in thanking these are true captains of industry. These are the experts in investing on the continent. And it's been an honor and privilege to be with all of you gentlemen again. It's terrific, and we really appreciate. Please join me in thanking our wonderful panel.